Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining me as part of the virtual Financial Markets Quality Conference at Georgetown University is Alberto Rossi, Associate Director with the Center for Financial Markets and Policy at Georgetown, to discuss the adoption of fintech for firms and the clients they serve. Alberto, it's great to see you. Welcome to Trade Talks.
Thank you very much. It's great to be here, Jill.
And fintech, of course, was a very hot topic at FMQ. How is fintech helping individuals get access to credit and financial services?
I think in a massive way, right? So we have that individuals historically had been cut out of certain financial services. For example, it was really hard for individuals with a net worth lower a certain threshold to get access to financial advice. And now instead we see that thanks to robo-advisor and fintech technologies, individuals are able to have access to financial advice. And now we have that apps are becoming more and more sophisticated in helping people making better consumption, saving decision, for example, and even getting access to loans that they were not having access to before.
In what areas are we seeing the biggest changes?
As far as I can see, I think that the biggest change in terms of we're going to be seeing it in the wealth management space. So we know that financial advisors or human financial advisors had a massive impact in how wealth was managed. And now we have that robo-advisors can have or can provide similar services for a fraction of the cost. So there is a state of the world where we're going to see a big transition from human advisors into robo-advice, at least when it comes to wealth management. Now, I also think that in terms of lending decisions, this market can be disrupted as well. For example, I think that peer-to-peer platforms have potentially scope to being very important in the future. But I think that there are still some technological challenges right now in terms of connecting lenders and borrowers.
What are the technological improvements that are allowing financial institutions to offer these new services at lower costs?
I think basically the biggest improvement is getting access to data and having individuals' information regarding data and the ability to process this data. So we know that with the explosion of the availability of APIs, many apps are able to getting information regarding individuals' positions and individuals' bank information. And this allows them to process this information and provide them with particularly good conditions when it comes to loan information and loan decisions.
And on the other side, what are the potential pitfalls associated with automated advice offered by fintech firms?
I think, yeah, this is something that maybe we have to become accustomed to, or maybe not, maybe we're going to find a solution, but is potentially the privacy issues, right? So we know that everybody's information is becoming more and more widely available. We know that the individual's digital footprint is now becoming used when it comes to pricing and lending decisions. And so, of course, this can make many people cringe, right? So some people are completely on board with sharing a lot of their lives, and some people instead want to have a lot of privacy and want to keep part of their life completely private. So I think that we're going to have this kind of tug of war going forward from a regulatory perspective.
What do we know about the optimal design of robo-advisors?
So I think we're learning a lot. I mean, when I'm thinking about robo-advisors, I'm thinking about companies like Wealthfront and Betterment and Vanguard PAS or Charles Schwab robo-advisors. One thing that is becoming apparent, at least in my research, is that many cases people have limited trust in machines only. So you sometimes, or in many cases, you need some sort of hybrid model where you have that some of the portfolio allocation decisions, for example, are delegated to the machine, but then you still have a human interaction, because this gives a huge amount of confidence to the individuals, and this also communicate a lot of value. So one of the things that I always say is that sometimes many products can be amazing, but if the company is not able to communicate to the customer the value they can provide, then you're going to see a lot of attrition. So you're going to see a lot of people that are going to sign up for the product, but over time they're just going to abandon. And we don't want that, because in many cases, many studies show that adoption of these tools is really beneficial for the individuals. So the majority of people that do or take care of their finances on their own make significant mistakes when it comes to investing their money. So they can actually increase their wealth systematically and dramatically by adopting this kind of robo-advising tools.
Yeah, that's a great point. So how important is artificial intelligence with fintech firms?
I think this is a crucial point. I mean, we're going to have, I think that the one thing that I've noticed collaborating with a lot of companies that in some cases, companies argue that they're using artificial intelligence more than they really are. So there is still a lot of way to go, but in principle, artificial intelligence can help dramatically, right? So if we can have algorithms that can design and give good advice on the basis of the individual's consumption decision and demographic characteristics and demographic informations, then we're going to have potentially a way to provide to them very good advice at very, very low costs.
All right, and to wrap up here, I have a two-part question for you. So we spoke about data privacy just a bit before, but let's expand that a little bit more, the relationship between data privacy and fintech, and then where do the regulators come in when it comes to adoption?
I mean, this is an extremely important question, and this is a question that the regulators are going to have to struggle with. I mean, as far as I can see, one thing that I think we should strive for is to make sure that individuals consent to the use of their data, and then they are completely aware of what is done. I mean, one thing that is still not clear to me is that many people understand exactly what it means when they sign off the right to use their data, for example. So I think from this perspective, what the regulators can do is to try to make sure that these clauses and adoption consent forms are as easy as possible in terms of understanding. So only then we will have a part of the population that are going to be signed in and a part of the population that instead is going to be out of these services, but at least they will do it knowing what they're missing out and what are the benefits.
All right, Alberto, appreciate the insight. Thanks for joining us on Trade Talks.
Thank you.
You got it.
Have a
And
good
thanks
day.
for joining me. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.